Hi guys. Today we will analyze Monster Beverage stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock has been an average performer in the overall market. The short-term trend is positive, while the long-term trend is still neutral. It is advised to wait a little bit longer to see how this turns out. Strong support levels are around $88 and $83. Next strong support levels are around $75, $70 and $67. Strong resistance level is around $98. In the last month the stock has been trading between $84 and $98.50 range. It is currently trading near the high of this range. It may be a good idea to wait for a pullback before considering an entry. The stock has an average volume of 2.9 million. This is a good sign as it is always nice to have a liquid stock. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model. Discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 13% per year, for last 5 years. We see that the average profit margin of the stock has been around 26% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 97% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for Monster Beverage Company: bad, average, and good. First scenario. Monster Beverage will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be low, 10%. Future profit margin would be low, 24%. Future free cash flow to net income rate would be low, 80%. In this case, the fair value of the stock today would be $52. Second scenario. Monster Beverage will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 11%. Future profit margin would be average, 25%. Future free cash flow to net income rate would be average, 85%. In this case, the fair value of the stock today would be $60. Third scenario. Monster Beverage will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 12%. Future profit margin would be high, 26%. Future free cash flow to net income rate would be high, 90%. In this case, the fair value of the stock today would be $68. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 2.53. Minimum rate of return. I will use 10%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For Monster Beverage, analysts forecast growth rate around 12% per year in next 5 years, and future P/E around 35. Again, I will use 3 different scenarios for Monster Beverage Company: bad, average, and good. First scenario. Monster Beverage will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be low, 10%. Future P/E would be low, 17. In this case, the fair value of the stock today would be $43. Second scenario. Monster Beverage will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 11%. Future PE would be average, 19. In this case, the fair value of the stock today would be $52. Third scenario. Monster Beverage will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 12%. Future PE would be high, 21. In this case, the fair value of the stock today would be $62. As you can see, today the stock is overvalued, $96, even if we expect the company's high performance in future. The company has a good profitability rating, and good financial health. Also, the stock is expected to show a medium growth in revenue in the next 5 years, 10 to 12% yearly. However, the stock looks overpriced at the moment. I may consider buying the stock when the stock drops below $60. Company's strengths. Monster Beverage Corporation is an American beverage company that manufactures energy drinks including Monster Energy, Relentless, and Burn. Monster holds nearly 39% of the $5.7 billion U.S. energy drink market, the second highest share after Red Bull. Monster shows an outstanding record with its growing cash, and no material debt on its balance sheet. The company also has numerous actionable growth opportunities abroad, and in new markets and categories. Acquiring Canarchi Craft Brewery Collective, for $330 million in cash, Monster Beverage is expanding into alcohol. Monster begins local production in Brazil, India, Japan, and South Africa. This increase in local production should lower manufacturing and transportation costs, and reduce foreign exchange risk. Monster's strategic partnership with Coca-Cola aligns its fortunes with the widest moat in non-alcoholic beverages, affording a top-tier store positioning and merchandising. International expansion through Coke's bottling system offers material runway for growth. The company's return on assets of 17%, return on equity of 20% and profit margin of 23% are amongst the best returns of the industry. The company is debt-free. Based on estimates for the next 5 years, the company will show a medium growth in revenue. The revenue will grow by 12% on average per year. The earnings per share is expected to grow by 15% on average over the next 5 years. Risks. The company's business model has relatively less operating leverage, because of its outsourcing. The beverage industry is intensely competitive and includes larger, well-funded companies such as PepsiCo, Dr. Pepper and Red Bull. The company also faces risks from new health regulations, including efforts by state and local governments, to limit beverage sizes and tax sugary drinks. The company suffers from a high inflationary environment, which resulted in a temporary decline in margins. Higher commodity costs, unfavorable weather conditions, and the unsuccessful launch of new products are additional risks. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.